Hello traders, this is your trader's friend. Thank you for joining me today for another video. I'm so glad you could be here with me. Guys, I hope the sun is shining on you brightly wherever you are in the world. Today I'd like to talk to you about moving averages. And I'm sorry if I've made moving averages something magical for you. Moving averages are based on price movement over a particular period of time. Everything, including your moving averages, your trend line, Fibonacci, everything follows price. So you want to follow price in the direction of an established trend. Let's take a look at some charts. Before you have the Euro USD on the daily time frame. And you'll see we got a valid break above on September the 6th, 2007. But I just want to point this out. Before you got that valid break, you got this trap. Guys, if you enter what looks like a good trade and it doesn't work out, chances are it's a trap. Go ahead and cut that. If you get in on the 50 pretty soon after you're stopped out, go ahead and get out. Chances are it's a trap. Now, this is your entry candle on September 7th, 2007. And notice you get a nice sweet run up until you get that break again on December 14th, 2007. Then you get into this choppy sideways price action before you get back into a sweet run. Now, keep in mind that price is going in harmony with that 200 period SMA. Just wanted to point that out to you. But again, you get the sweet run and this choppy price action again. And guys, I want to say you're going to get more of the short term or choppy price action runs than you will the really sweet runs. Now here again, the 29th of July 2008, you get the break below that 50. The high on that candle is 1.5756. And well, I guess we should take the high of the next candle because that's actually your entry candle. The high on that candle is 156.16. And you continue on until you get a break back above on December the 9th, 2008. And the high on that candle is 1.3000. Guys, that's quite a run before you get into more of those shorter term runs, and then you get into this nice sweet run up. And again, guys, keep in mind that this whole setup is going in harmony with that 200 period SMA. Just wanted to point that out to you again. Here on December the 4th, you have that break below that 50. You continue on until you get that break back above on April the 11th, 2010, and you get the break back down and so on. Let's take a look at this on the 4-hour time frame. Now note, before you get this valid break here on December 4th of 2009, you have all of this short term and choppy price action before that. So keep in mind, you're going to have more of that than the sweet valid runs. Okay, you broke this on the 4th of that December, and you got a valid break above on December the 28th, and that's about a 600 pip run before you got into this choppy and short-term trading action. You got a break again on January the 15th. Sorry about that. And then you got a break back above that 50 on February the 16th, again, which is about a 600 pip run. Then you get into this choppy sideways price action again, another short-term run, and you get into a really sweet run here on April the 16th because you got that close below. You get into that on April the 16th, and you do not break back above that again until, or close back above it again until May the 20th. So guys, I just wanted to point out to you how you have sweet runs, then you get these choppy sideways period. And I just want to say this, once you get into a sweet run like this, this is July the 1st of 2010. You get this good sweet run, except you get a false break there and a false break there. And you get this valid break back below on August the 10th. Guys, that's about a 700 pip run. But keep in mind, you're going to get more of this the smaller term run and this choppy price action than you will another valid break. You don't get another valid break of that 50 period until September 13th of 2010. You get in here and you will ride that until you get a break again on August 18th, 2010. Now that's like a 1200 pip run. Then again, you get into the sideways price action. Let's take a look at this on the hourly time frame. But before I go, if you get a good run, especially on a short term time frame, because you're going to get more of this choppy price action on the shorter term time frame, go do something else if you've just gotten out of a good run, because all you're going to do is end up into this choppy, frustrating kind of period. On this one, let's go from August the 4th, 2010. You get that break below that 50 period. And note that you don't get a close back above that previous candle, but you do come back to kind of challenge that later on. But you get that break below that 50 on September 9th of 2010, and you do not get a valid break back above until September 16th. Okay, because this is the hourly time frame. Sorry about that. Until September 16, 2010. And notice what you get into. You get into this the short-term ride and this choppy price action. Before you get another short-term run, choppy price action. You get a valid break again on September 1st. You get a pretty good ride. Get a break back below, pretty good ride, choppy price action. And guys, please pay attention to how many traps you get into prior to getting a really good run. That's why it's so important, if you get into a bad trade, to go ahead and cut that trade quickly. And look how beautifully that continued to bleed to the upside. Now, with the exception of the few false breaks. But guys, anybody who got trapped down here, this is at, let's say, the high 126.84. Price went against them up until 1.4028, which is that low, before you got a valid break of that 50 again. So guys, that's why it's so important for you to cut bad trades quickly. I can't stress that enough. Let's take a look at this on a 1 minute time frame. Now on the 1 minute time frame, and you'll see there is your trap. Yesterday, this was December 27th at 1951, you got that trap. Pretty soon after, you're stopped out at 2005. So guys, please, especially if you're on shorter term time frame, cut bad trades quickly. I know I keep saying that, but it's so important. But note, you get a really good run at 2005 on the 50 period, and then you get into this kind of sideways choppy hell before you get another little run at 2335, choppy sideways action, and then you get another little run at 259, and these are all market times, by the way, before you get into a nice sweet run, break of the 50 period at 5:30 market time. And this isn't the sweetest run in the world, because then you get and note, keep in mind, like I said, you're going to get that choppy price action and the smaller run before you get a close back above at 708. You get another pretty good run here at 947. Now that actually ended up being a pretty good run before you get a valid break back below at 1225. And then, oh, this ended up being one of those sweet runs. You get that sweet run. You enter on at 1226 according to the 50 in 50 out, and then you get out at 1400. You fall back below and you get out here. And guys, keep in mind that between the sweet runs you're going to have this sideways stuff and the choppy stuff. On some days it's worse than others. This is actually where we are in the market currently. But once you get a sweet run on the 1 minute time frame, go do something else for a while, because all you're going to do is end up into this choppy sideways stuff that will frustrate you, is boring, and it will chop you to death. Once you get a good run, go find a couple of hours to do something else, because you'll see that we got the really sweet runs at 20:05 yesterday. We got another really sweet run again at 12:24 today, market time. So keep in mind the really sweet ones are few and far between, and in between that you're going to get these good little runs like that are going to be about 30 pips. Sometimes they're 30 to 60 pips, 20 pips or so, before you get back into that sideways price action, before you get into those sweet runs, guys. And this is the last thing I want to leave you with. It's about being at the right cross at the right time. Again, it's about being at the right cross at the right time. So I wanted to show you that your sweeter runs on the cross of the 50 are fewer and far between than the choppy sideways run and the smaller term runs. Guys, you can absolutely do this. You can be successful at Forex. Have a terrific trading week.